Hi guys, welcome back once again to this beautiful channel, OK Investing, and I'm just glad to see you back. So if you're a returning subscriber, guys are freaking amazing. If you're new to the channel, you're in for a surprise. But yeah, welcome to portfolio update number 11. This is fantastic, just keeping up to date with each portfolio update, slowly getting better. I'm starting to understand this YouTube game just a tiny bit. But yeah, I always start the beginning of these with just general updates. So thank you again, Natasha. We just did a really good podcast episode with Natasha. It was really great. If you haven't seen it, please go and watch it. Just a quick addition, clearly since I'm the world's #1 YouTuber, I've released this video a tiny bit late, so I've also done a podcast with Kayana, so I also want to say thank you, Kayana. The podcast with her was also just as amazing. And again, I understand some people may not want to go and watch all of like a 30-minute podcast all in one, so now one thing that I do is I split up into podcast clips. So the main highlights of the podcast I'll split up into bits so you guys can watch that. Sorry for the spam of each individual clip. What I'm going to do next time is I'm going to just schedule those to come out like one day after another, so you don't just get 7 notifications in one day. But yeah, please go and check those out. I think it was really good, and it just shows me that you want more, so please go and watch it, like them. Now again, this channel is all about learning stuff. If you're just a normal viewer, why do YouTubers always be like the video? Well, no, it actually makes a difference. I'm going to explain it to you. YouTube is pretty much a search engine, right? It's an algorithm. So there's so much stuff uploaded onto YouTube every single day. So it needs a way to be like, okay, how can we tell which content is good and make it appear on more people's feeds? So if you like a video, it kind of tells YouTube, okay, this is a good video. So if you like and you comment, it shows that that video is good. So if you do like my videos, if you watch my videos and you just want to support me, please like it. Please leave a comment. It literally makes the biggest difference. I know sometimes I forget to say it. I need to start doing that more, but it really makes a difference. It pushes it out to more people. So if you want my content to grow, please like and please leave a comment. And here is a spicy nugget of information. There are so many more podcasts to come. I've got a couple people booked in. The whole purpose of the podcast, if it wasn't clear, is I'm going to have loads of different people on, mainly people that have just started investing, so it just makes it more relatable, because I said not everyone's like me when it comes to investing, so I think it's a lot more interesting to viewers, and you guys will get a lot more value seeing other people that are probably like you. Maybe some of them haven't even started investing, maybe some of them have just started investing, just to get okay, these are the fears and feelings that I had. Oh, this person's saying the exact same thing, but they've overcome that and they've started investing. I just think that's really valuable to you guys. And just, again, my channel's about investing, money, finance, just doing more. Most of my guests that I invite on, not all of them, but so if you're an upcoming guest and you hear this, so you don't need to start sweating, it's fine. But I like to promote the idea of doing more things, and I it's just a really nice way to work together, you come on the podcast, you talk about your stuff, and you also promote the idea that, okay, you don't just stick to one, well, you shouldn't just stick to one normal job, you can also do lots of different things, and if that's also your passion, that's a fantastic thing. Another big update, all of my videos and all of the podcasts now and all videos and podcasts to come are now on most podcast platforms, so Apple Podcasts or Apple Music, Spotify, listen to it on Alexa and Amazon Music. So if you guys don't want to just watch my videos, you can also just listen to them. So I just want it to be a lot more accessible to more people. I promise we're going to get to the portfolio update soon. If you want to skip all this stuff, the timestamps are in the description. You can skip straight to the portfolio update. I did want to create quick and snappy news, but I don't think I've reached that level of YouTube. Yeah, but I do want to create a weekly video that I just cover the news of that week. And I think I'm going to call it Tuesday News Day. Hopefully I actually bring them out on Tuesday. I think that'll be cool. Let me know what you think about that in the comments below. And there's some new guides that are coming out. So yeah, man, I'm working, learn to speak. I'm working on a whole bunch of different things. So hopefully you guys see the value of that and you like it. So yeah, now let's actually get into the portfolio update. So I already know what you guys must be thinking. K, you clickbaited us. This said 15,000 portfolio update, but the market value here is only 12,000. But yeah, you're not completely wrong. But as I've said in the past portfolio updates, I'm 80% invested in Tesla. Things can swing dramatically, and things kind of have. I think I'll be showing my FreeTrade portfolio as well, so you can more accurately see how drastically things have changed in this past month, which has been a wild ride. At the end of the day, if you're looking at this in the long term, it really doesn't matter. Your focus should not be on these short-term swings, and as someone that's very focused on the space, it's just very funny seeing people like panic about certain things. Yeah, let's just kind of get into the update. So nothing major has changed. I have also sold out of Apria. That's to kind of help fund my business venture. Tesla has gone through some interesting things this month. So loads of people were like, and loads of people that I know especially, were kind of recently invested in Tesla, and it's completely normal as a new Tesla investor. You look up what are the things going on with the company. As a new investor, you'll probably be focused on its momentum upwards, okay, which is, I guess, completely normal. Who wouldn't? Like, everyone's paying attention to that. So they'll be like, okay, it's been going up, it's probably going to continue going up. What's the main factor that's going to lead to that? Ooh, S&P 500 inclusion. For those people that don't know, the S&P 500 is like an index of the top US companies, okay? So it's kind of like a prestige thing to be added into that, and if you get added in, it means loads of different hedge funds have to buy your stock, and loads of people thought Tesla were going to be added, and for whatever reason, they didn't. Okay, and that obviously put a shock into loads of investor system, which caused the stock to plummet the most it's ever done, by 21%, which to me, I think it's funny because it just shows like that's not the only reason why it was dropping. Like, the general market was also dropping, but I just think it's pretty hilarious. I think some people saw my Instagram post, which I'm showing now, and probably took it kind of seriously. It's like, I'm completely joking. Like, I when I say I have no feeling towards my portfolio value going up and down, I'm not joking. Like, I don't care, because I'm not looking at it now. I'm looking at it what it'll be in like 30 years time. The fact that loads of people were scared about this Tesla S&P 500 inclusion and like it's not being a thing right now, it just shows if you're investing, if you're a long-term investor, your fundamentals are out of place. Tesla being included or not included in the S&P 500 has nothing to do on like with the company. If it gets added, cool. If it doesn't matter. It really doesn't matter. Like, has it affected the company? Has Elon suddenly broken one of his legs because the committee didn't choose to include him? No. Also, another thing is that people are very short-sighted. Really funny to see, oh, Tesla created, oh, Tesla's falling down the roof, blah blah blah. It's like it's down like, okay, 7 days down 10%. Like, Tesla on the like year-to-year basis, just look at how much it's increased. It's really insignificant. It's funny. People are very short-sighted when they look into that. But anyway, cool. Let's go on to Facebook. So Facebook is doing pretty good. If you guys want to hear me talk more about like the actual inner workings of these different companies, I guess I'll leave that for a separate video. This is just to kind of show how my portfolio is doing, or else this video will be like an hour long. So Facebook is up 51.5% for me. I've currently got a holding of 636 pounds. Walt Disney, it's up 9.3% for me. I'm currently holding 512 pounds in there. Johnson & Johnson, my baby, is up 10.7%. I'm currently holding 474 pounds. AMD, always making dough. Okay, can we just say that again? Always making dough. That just fantastic. It's up 50.7%. I'm holding 444 pounds. Realty Income is doing relatively well. It's up 12.2%. And I'm holding 407. I'm also looking into Store Capital. Store Capital is a very good REIT that I do want to own more of. And then there's Beyond Meat, who is currently still down for me. I'm down 1.4% and I'm holding only 21 pounds. Okay, so now let's go into the portfolio summary. Like, so many people have recently followed me on Instagram, and thank you so much to the people that shout me out. And this is one of the stock trackers that I say it's really good, because this is what I mean. Like, look how nicely this visualizes everything. Okay, so when it comes to the portfolio, my portfolio's value, SimplyWallSt rates it 0.2 out of 6. So it's not great. Okay, Future is currently rated 5.39 out of 6. Which is, good. So it shows that most of my companies are, again, weighted on future growth. Past, it's 3.09 out of 6, which is average. and health is 3.95 out of 6. I just call that 4 out of 6, because again, so you want to invest in companies that have good financial health, which means they've got a lot of cash on their balance sheet, they don't have that much debt, so if they reach hard times, they'll be fine. Okay, and then the dividend is 0.36 out of 6. Again, my portfolio is clearly shifted away from a dividend portfolio, but that's completely fine, because at the end of the day, money is money. So returns since inception of my portfolio, so I'm up 72, my capital gain 72.95%. That's £6,300 essentially. I've received about £44 in dividends altogether. In changing currencies, that's resulted in a loss of £134. So my total return has been 71.91%, which is £6,200. And if you guys on YouTube is like, why am I just reading this out for something that you can see? This is also out on podcast, so there's audio listeners, so I just need to keep that in mind. Okay, so that's pretty good, and I like that. And this is something I wanted to do. Okay, so when I first started investing, or before I first started investing, one of the most common things you think you're going to beat the market? You think you're going to beat the market? It's like, well, I've been investing for a year. Which I'm proud to say now that's pretty cool. And my year-to-year performance, you can see. You can look up the S&P 500 performance, which I've definitely beat. So for that, I'll say, I think I can give myself a pat on the back. But at the same time, I'm not stupid. I also know that over a long period of time, it becomes increasingly harder to do that. Okay, but the main point that I'm trying to make is that you can beat it over a short period of time. Over a long period of time, it's a lot harder. But if you do the same thing as everybody else, you're going to get average results. If you think differently and do things that are slightly different, you have a chance to outperform or greatly underperform. Hopefully I won't be in the latter. Okay, now let's see my portfolio's volatility. It's very, very volatile according to SimplyWallSt. It's like all the way to the right of the scale of volatility, because I've got so much in Tesla. Okay, and contributions to returns. So 128% of my return is attributed to Tesla. And then you've got very minuscule things. Who's number 2? Number 2 would be Facebook, then AMD, then AbbVie, then Carnival Cruise Line, then Johnson & Johnson, which is very interesting. Who's been my biggest loss? Because obviously I have made losses, and that's just through selling things that have gone down in value, which you want to avoid doing. I think my biggest loss is Lloyd's. Diversification, again, this isn't surprising. My diversification is horrible, because obviously 85% of my portfolio is in Tesla. It is what it is. I've kind of talked about my opinion on diversification before. If you want to see that, you can check out the previous update. So I don't want to go too much into that. Man, this makes me laugh every time I see it. My PE is, again, still disgusting. Okay, so my PE priced based on earnings ratio, 747. So just for people that don't know, the PE, price to earnings ratio, is kind of like a good metric on whether a specific company is overvalued or undervalued. The market average at the moment is 20, okay? And mine's 747, so that's just like, SimplyWallSt is saying it thinks my portfolio value should actually be £5,700, whereas my current portfolio value is £12,300, so it thinks I'm currently overvalued by 115%. So time will tell who's actually right about that. My future growth for my portfolio is saying that it should be about 38.5%, which is pretty cool. Debt looks worse than last time, which is strange to me, because I don't know whether they've taken into account one of my biggest holdings now, Tesla. One of the biggest things in the news now, they just sold $5 billion worth of stock to just get more cash. So that to me would indicate that they have a lot more cash on their balance sheet, and so they have a lot more equity. So I don't know why this is worse than last time. This is something I can look into. And yeah, my dividends per year has slightly increased. I think last time it was £28 per year, now it's £30 per year. I think that's just because I've been reinvesting my dividends, which is cool. So even on like a month-to-month basis, you can already see that starting to rise, which is cool. You know, the compounding effect of dividends. And if my portfolio was a lot more weighted to dividends, that would probably grow a whole lot more quick. So yeah, okay, so that will be that. So I'm not sure what part of the video I've inserted this into, but here, yeah, so now I'm just showing my portfolio on actual FreeTrade, just to kind of emphasize and show again. So if you look at this, and I've been investing for over a year, which is crazy, so now I can show this, and I think this again just kind of shows the point of just consistency over a long period of time and just putting money in. And the point that I made before, or I've made to some people that have reached out to me through Instagram or some other means, you know, again, because of my situation, I haven't really been funding this since like about March. Okay, so a lot of the growth now that's happening around here is because of what's happened, or the money that I put in like a lot earlier on. So now let's just kind of go, there's just a couple points I want to make. So if we go to the month view, okay, so this is generally what's happened this month. So we started off around 9,000 and now we're about 12,000. Okay, but during that time, you know, we did go up to 50,000. So guys, I didn't completely clickbait you. It was there at one point, I promise. This is mainly due to Tesla's rapid increase and fall. So one question that I kept on getting asked is, when is a good time to sell? I think that's a normal thing to think about, and I'll just say that it's definitely not when the stock is falling. Okay, you want to look at the fundamentals. If the fundamentals of the company aren't changing, it doesn't really make sense to sell. The stock price, all of this is just a visualization of what people perceive of the company. It has nothing to do with what the company is actually doing. So do not follow market movements if you're a long-term investor. You know, think about, okay, what is the company actually doing? Are they meeting their targets? Are they not? Okay, if they're failing, maybe then you can sell. If you've already met your goal, so if you invest in Tesla in, let's say, like 2013, and you've already like more than 10x your money and you're fine with that, cool, maybe you can cash out. I'll still say that's very short-sighted, because they have so much more to grow, but you know, that wouldn't be the worst thing for you to do. But selling out just because, you know, everything's suddenly going down, you'll hate yourself when things start to go back to normal. But anyway, that's all I have to say. So I hope you guys have generally enjoyed this portfolio update. Thank you so much to my patrons, which I'm going to do a special shout out to now, and make sure you like, subscribe. So again, thank you to my beautiful Patreons. Shoutout 27 and Vanda Panda. So yeah, that will be the portfolio update. Thank you guys so much for tuning in. Please like, please subscribe, and I will see you guys in the next couple thousand videos that I will be making. See you guys. Bye.